Hey gang, Chuck Barone here. Monday, August the 15th, 2022. New week and all kinds of fun new stuff to talk about this week. As always, I want to thank everybody for their support for the channel, for the support watching the videos, your likes and comments. You guys have been just super generous, and I want you to know, I'm going to say it pretty much every single day, how much we really appreciate your guys' support. And the markets today, well, this market just keeps on rolling along. Update in the stock market, stocks up across the board. Stocks on a 4-week winning, stock markets on a 4-week winning streak, working their way out of bear market territory. This stock market rally looks, I guess they're waiting for news to stop this run. There's a lot of data coming out we'll go over in a little bit this week that could do it, but stocks just look like they just want to keep on going up, guys. The bond market today, choppy day, 10-year at 2.79%. The yield curve inverted still, and I was reading that if the yield curve inversion could reach 85 basis points between the 2-year up here and the 10-year down here. That would be the highest inversion, the deepest inversion since Volcker's recession in 1981. So let's see how this bond market plays out over the next couple of weeks. There's so many conflicting signs right now, guys. The bond market is telling us we're in a recession, but there's a lot of stuff that's telling us it's not really on yet. The dollar rallying on up to just under 106.5 on the dollar index. It had a setback, it's going down, and now it's rallying right back up. I guess the market's starting to take the Fed seriously in this September rate increase and their rate increases throughout this year. We'll see if the Fed's got the stones to actually stick to what they've been saying. It looks like they do right now, but that doesn't mean it will look like this again tomorrow. Metals today, not a great day. Gold down, $1,780 per ounce. It broke its support above $1,800 per ounce. It looks like it's going to have some resistance there now. I was hoping for some consolidation. It didn't work out. Hopefully, when it gets through next time, the dollar won't be strengthening like it is, and it'll be able to consolidate and hold that $1,800 support line. Silver down again today, down almost 3% to $20.34 per ounce. It's holding its support nicely at $20. So it'll be interesting throughout the rest of this week, depending on how the dollar goes, if silver can continue to hold that support line. If it does, a very good sign for silver. Oil today kicked down hard. Oil down 3.5% at $88.92 on the West Texas Intermediate. Natural gas rallying again, $8.85 for their British thermal units. Natural gas is going to still keep going up, especially as we get closer to winter, guys. Oil, they're actually talking about a glut, and there'll be oil data coming out this week that'll give us an idea of if oil inventories and gasoline inventories are really growing. Bitcoin, tough day today, but it's still holding its support above $24,000. Started the day up. It looked like it was going to get above 25,000, and the rally kind of fizzling out toward the end of the day here. Bitcoin ends lower. Lots of data coming out this week, guys. As I usually do on Mondays, I'll let you know what we're going to be hearing about. Today we had a manufacturing data showing manufacturing continue to contract. Tomorrow we'll be seeing more manufacturing data. We'll be getting housing and builder data, buildings permits. On Wednesday we have inventory data, mortgage bankers index, and retail sales data coming out. On Thursday we'll get jobless claims, existing home sales, leading indicators in the Philly Fed survey. So all kind of important stuff coming out this week that's going to indicate and give us an idea of really where are we in this recession with this inflation, this stock market rally, and all of the things attached to it. Lots of important data coming out, and of course we're going to go over all of this data in detail. Now the question of the day, guys, that I got to ask is, are we in a recession or not? I mean, it just seems like everything's so mixed right now, right? You get one bad data report over here, the next day you get something better. You get this comes down, this goes up. In the face of interest rates going up with more rates to come, you got the stock market rallying. It looks like the stock market is pretty much priced in the rate increases for the rest of this year. I think they're figuring on a pivot next year where the Fed begin now to cut rates. This recession, if it is one, is not super deep right now. I think that, there's just so much conflicting stuff. So the data that says we're in a recession. Okay, so you got the inverted bond yield, which is not a great thing for the coming economy. Typically a very solid indicator of recession. You got 2 negative quarters in a row of GDP, which has typically been the definition of a recession. You've got bad data coming in pretty much everywhere. Debt levels going crazy, not only for businesses and the government, but for individuals and households. Manufacturing continue to shrink and shrink, not doing well. It seems like the more data you get, the more you read, it just keeps saying yes, 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 that we're in this recession. You got bad inflation here, and you got really, I think, the inability right now with this market to take and absorb any more bad news. You got bad news on the economy, you got bad news in the government, you got bad news in inflation, you got bad news geopolitically with Russia's war with Ukraine, China's saber rattling toward Taiwan and Japan, all the issues going on around the world. This all points to not a great scenario for the economy. On the other hand, the no side would be, look at these employment numbers. I mean, it's really hard to say you're in a pretty steep recession if employment continues to grow and grow and grow. Consumers, they don't care. They just keep on borrowing money and spending money like nothing's different in their life except the cost of goods going up. You got the stock market rallying like crazy in the face of 53% of the S&P 500 growth stocks had no growth last quarter, yet the S&P continues to rally. You got strong demand for cars, used cars and new cars, and big ticket items selling. You got travel booming throughout the country. You got the casinos, and one of my indicators always is how are the casinos here in Vegas doing? And the casinos in Vegas are raking in wins like they never have before. Breaking records pretty much every month, taking in more than $1 billion a month in gambling. So I'm thinking that, if we're really in a deep recession and the economy is tanking and people are not doing well, Vegas isn't showing it, not at least on the Strip. Now housing, that's a little bit different story, but I think that this is all very mixed signals of where are we in this economy. I wish I had the definitive answer. My instincts tell me this is a recession. I'm looking at, especially in my industry and housing here, it's just a complete disaster. Housing in Vegas we've already chopped a third of our sales off. We were averaging a little over 3,000 to 3,500 sales per month. Now we're at 2,000. Purchase contracts tanking, listings staying on the market longer, more people listing, and the housing inventory. We were at literally a 2-week inventory here where we had basically, 1,500 houses on the market without offers, 2,000 houses on the market. Now we're up almost to 8,000 houses on the market here in Vegas. A lot of this tells me this is recessionary. At the same time, everywhere you go, you see people out spending, eating, doing, and living their lives like nothing's changed. I think ultimately, in the end, guys, it's all going to come down to the actions by the Fed. If the Fed is serious about containing this inflation, which without oil in the picture is pretty harsh right now. I mean, basically the only reason the inflation data came down in July from June is because of oil going down. Oil continues to lead down So the inflation data for this month might be distorted by oil as well. I think if the Fed continues to raise rates and do the things they need to do to get this inflation under control, then I think we're going to be dealing with a recession that's going to linger. Maybe it's a technical recession right now, and with more to come later when the economy actually, when the public actually catches up with the data, and the data catches up with the public and hits them where it counts in their pocketbooks. I think rate increases obviously are going to slow the economy. They haven't yet, but we'll see how that continues to go. And also, the Fed still has to deal with their quantitative tightening. Their balance sheets bloated at almost $9 trillion. They've been promising to start getting rid of that, to start lowering that balance sheet by more than $100 billion a month. I don't think that they're doing that yet. I think that when they start to pull that money out of the economy, that's going to have a serious effect on the economy. It's going to force bankers to tighten lending standards. So we'll see. The actions of the Fed, I think, ultimately are going to dictate, if it is a recession, how deep that recession is. And if it isn't a recession right now, other than a technical recession, that it'll turn into a full-blown, painful, long-lasting recession. I got to tell you guys, this is really I have never really dealt with investing during an inflationary cycle like this one. The last one that happened, I was old enough to remember it, but not old enough to be an investor in that market yet. I was just a young kid, well, not a young kid, but a young man. And so this is really some, when you got the data pointing in every single direction, it's hard to get a take on where we're going to go going forward. I think that some of the data coming out this weekend, we can kind of predict that, housing is not going to be looking very strong. I think manufacturing is going to continue to shrink. So the really important data I think coming out this week is going to be the jobless information. I think that if joblessness starts to rise in any type of dramatic shape, then that's going to signal stronger that this recession is real and it's here now. Without that, as long as jobs continue to rise and wages continue to rise, even though they're not quite keeping track with inflation, I think it's going to be hard to call this a full-blown recession. Anyway, that's it for today, guys. Happy Monday. As always, if you like what you're hearing, hit the like button. Ask your questions in the comment section. Please comment. We appreciate that. Don't forget to subscribe if you haven't already. Ring the bell to get your notifications of our videos coming out. Don't forget to ask me questions. Ask chuckbarone@gmail.com. And in the meantime, we'll see you guys tomorrow. Thanks.